Ladies and gentlemen, welcome back to the channel. We have a jam-packed one to get into here today for all of you guys. Now, AMC stock is up 4% on the day. Pretty crazy things that are happening in the world of bonds. TLT is up 1.77% after some comments from Bill Ackman. Bill Ackman seems to have started this rally today, leading the Nasdaq up 1% after 1 point being down about half of 1%. Today was really a make it or break it moment for the broader indexes, and you were getting some pain in the beginning of the trading day. So we have a lot to get into in that regard. We're going to talk about everything you need to know about AMC stock, the RTX data, the Stonko tracker data, the option flow activity here for today as well. So let's go ahead and get into it. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. So first things first, what caused stocks to rip higher today was Bill Ackman. He covers his bet against treasuries, says too much risk in the world to bet against bonds. Pershing Square's Bill Ackman revealed Monday he covered his bet against long-term treasuries. The hedge fund manager believes investors may increasingly buy bonds as a safe haven because of growing geopolitical risks. Ackman also added that he removed the short because of concerns about the economy. So basically, let me break this down a little bit for you. Well, actually, I do want to say right here on the side of the economy, he says, quote, "The economy is slowing faster than recent data suggest." Again, kind of same thing that we've already known, right? The data says one thing, the economy is doing another. That's another reason why you probably don't want to be short in bonds right now. Now, let me kind of break this down in a way that I hope you guys can understand it. And I get it. Bonds are complicated. Bonds are much larger than the stock market in terms of actual market cap value. So you might think the stock market is the most important. You might think bonds are like secondary, but no, bonds are the most important. Stocks are secondary. Who buys bonds by and large? Who moves, the bond market? Big money investors, governments, big businesses, those guys, not retail investors, not, what's going on with any given stock at one point. So the best way to understand this, like Bill Ackman said, and I've talked about this so many times, you guys should know this by now, bonds are seen as a safe haven asset. So during times of geopolitical risk, with this Israel conflict being number one right now, investors will buy the bonds when there is uncertainty, when there is fear out there. Now, investors will also buy the bonds if there is uncertainty and fear about the economy, right? Why not lock in a 5% yield if you're about to go into a recession and the Fed's going to cut rates? That can actually give you a capital gain on your bonds. Because if you take a look at TLT, this is a 20-year Treasury ETF. Well, what's happened over the past really a long time now, right? Treasuries are way down, way down, but they've fallen so much. This is because the yield has risen, so it works like a dividend stock. If you have a dividend stock that's $100 that pays you $5 a year, that's a 5% yielding dividend stock. Well, if investors do not want to own that dividend stock, reference this to the chart of TLT, nobody wanted to own treasuries, well, that yield goes higher. But when people start buying treasuries, because maybe there's, geopolitical risk, maybe you're heading into a recession, whatever the reason is, well, that causes people to buy treasuries, and that causes yields to fall, which on one hand, that is good for stocks, at least initially, like we're seeing today. But it's something that is never good, okay? What Bill Ackman said today was not good news for the economy. It was not good news for the world. Initially, again, trading algorithms bought stocks because yields fell. You want to be very careful sitting here, if anyone is over there saying this is like the start of another rally. Usually rallies don't start off of bad news. Sure, is it possible? Of course, but probably not. Okay, so today was actually not the greatest news, but it did cause bonds to rise, it caused yields to fall, and investors are liking that. Now, if you look at KRE, the regional bank ETF, is up 1.23% as well today. That is good news. USO is down about 3% today, probably more so in line with those comments on the economy. If the economy does bad, oil is going to fall. And we're not really seeing that final stage, that final step in this Israeli conflict, that ultimate invasion, incursion into Gaza, and what ultimately follows that. I think that's when you have to have your, stopwatch going, because that's when things can hit the fan pretty quickly. But until that happens, there's nothing else that is really shocking us at this point. Now, DXY, the dollar, is flat on the day. That is a little bit of good news. Gold is pretty flat on the day as well. That's a little bit of good news. Now, what's interesting about this whole situation, and I've talked about this before, is gold was really the safe haven asset. Gold has been outperforming a lot recently, up like 10% in the last week, whereas treasuries were really hit or miss. Sometimes investors were buying them, sometimes they weren't. And I mean, today, in the beginning of the trading day, was again a new low for treasuries, a new 52-week low, a new multi-year low, like 5-10-year low, 20-year low on treasuries, right? So I don't know how long this is going to last, but as you can see today, stocks are doing well. If the bonds start to get the fear bid, the fear move, and maybe shorts even starting to cover on some of their short positions. Bill Ackman's a widely respected name on Wall Street. Then maybe that does fuel some upside from here. But again, it's when the next shoe drops in this conflict with Israel, or we get bad economic data coming out this week. Maybe Bill Ackman knows something about the GDP report that's going to come out this Thursday. That's also a possibility, right? GDP growth rate, quarter-over-quarter advanced data for Q3 is expected at 4.1%. Last month, you were at 2.1%. Durable goods orders month over month is also coming out the same time GDP is on Thursday. You're expecting 0.6%. Last month's reading was 0.2%. So you are expecting some really good data this week, and I think it's just too high. You're probably set up for disappointment no matter what happens. Now, on Friday, you're going to get core PCE index month over month, personal income and personal spending month over month. Personal spending's a big one because that's about 70% of U.S. GDP. So if that comes in light, well, it's probably not going to be great for GDP, or at least maybe the current quarter we're in for Q4. So that's going to start being the focus of attention for investors. But that's really the big thing that is moving the markets today. We also got some news that potentially 50 of the captives Hamas has might get released, and that's good news too. But until we see a military de-escalation, you gotta just, I don't want to say take it with a grain of salt because that sounds insensitive, but in terms of an investor, equity markets, and what happens to equities, you really do have to take it with a grain of salt because stocks are going to be very volatile here. They're going to react to the headlines. Some are going to be good, some are going to be bad, and a couple of those might be really, really bad. And you're waiting for those really, really bad ones because ultimately, I think they are coming, even if they are taking longer than what a lot of people expect. Now, if you take a look at AMC, AMC is up 4.74%. You have a live short interest of 7.32%. 14.48 million shares that are currently sold short. Cost to borrow average 1.56%. Cost to borrow max 6.17%. And cost to borrow minimum at 1.04%. Interactive brokers short availability. Looking at about 4.4 million shares that are currently available with a cost to borrow fee of 1.12%. So nothing too crazy over here. Cost to borrow max being at 6% is better than the 1% in which we have been at, over the past couple of weeks at some points. Now, Let's go ahead and take a look at the broader picture here. You have a short score of 57, $135.55 million worth of short positions in AMC. Estimated short interest on free float at 7.55%. Free float out on loan at 10.61%. Shares out on loan about 21 million. Days to cover 1.11. Cost to borrow 1.31. And utilization of 43.93. So you do have some interesting data over here. I think it's so heavily manipulated, it is ridiculous. Okay, that's just my personal opinion. So you do really have to be careful with what data points stick out to you and that you ultimately go with. Now, if you take a look at the option activity, over the past week, you have had 40 orders totaling $2.43 million with a positive order value of 53%. So you are getting some of that bullish option activity. If you take a look at the put to call ratio, that's at 0.74. This is lower than Apple, Microsoft, Google, the NASDAQ, S&P. It's basically lower than most of your other stocks you could pull up, right? The put to call ratio is pretty dang low now. I think this does set you up for a potential rally higher. Obviously, I've been saying this for the last 2 weeks or so. I still think a multi 100% rally is coming. Obviously, I don't know what's going to happen geopolitically speaking, economically speaking, what the data is going to come in as, and that's obviously could be speed bumps here, or it could help out the situation. Who knows? But I do think that multi 100% rally is still coming. One of those reasons, again, is that put to call ratio that is basically fallen off a cliff from where it was at about 1.8 just a couple of weeks ago. So there is that data. If you take a look at the Stock O tracker data, you do have, let's go ahead and refresh this. For this week, you have 10,037 calls in the money, 62,000 calls out the money, 8,700 puts in the money, out the money puts at 28,139. So a lot more call activity than put activity for this week. And again, AMC stock is up almost 5% today. So that makes a lot of sense. You want to get above your 8-day moving average. Over the past 6 trading days now, you have found resistance here at this level. Once you get above that, that's where things get a little bit more exciting. That's where you could potentially make that move to $12 per share, or $12 per share, $13 per share, potentially even higher than that. If you break down under this line that you can see here on the chart, which is at roughly about $8.30 per share, then you potentially fall back down to your $7 level. But I think you're probably just going to ride this as support. If you do come down, if something bad happens in the markets, that's probably just going to serve as a level of support for AMC stock. I'm not expecting big downside here. I am expecting big upside, but again, it's hard to tell with the kind of economic data we have this week, with the kind of potential escalation of this Israeli conflict we could also have this week. Those things are going to affect the markets, and unfortunately, it's going to affect AMC, whether good or bad, essentially. Now, the MACD through all of this is still is still bullish. It wants to go positive. The MACD is negative 0.87, and the signal line is negative 1.35. So the MACD line is, the yellow line. This is still above the signal line. That is good. Okay, that's what you want to see. It has kind of based out. If you do break into positive, that's where things get a lot more exciting. Potentially for AMC for that upside rally. Now, if you take a look at the RSI, that is at 44.29. So still, technically oversold under 50, but looking pretty good. You were oversold for a long time. I think you really need to see a big rally at this point just to get back to a more normal level for AMC, which is really in between the 60 and 65 range for a very long time. It's pretty unusual to be that oversold like we were, and then to not see a big pop higher. Usually, if you're oversold, you tend to break out past 70, right? Almost every single time, or at least get to 70. Literally every time you've been oversold in the past. Literally every single time. Every time. There's actually not one time where you have been oversold and then you have not ripped to at least the 70 on the RSI or overshot that to the 80 or even, you know, the 85 on the RSI. So again, that's a little bit more confirmation for me personally that a big rally is coming. But again, who knows with all these geopolitical tensions and big economic data this week. Not to mention earnings, big earnings are going to be coming out this week. Now, I did make a trade on RTX for tomorrow morning. So this video is going to be coming out, you know, 2:15, 2:30. If you guys are watching this video and you're listening to my voice right now, if you guys want to come trade with me live in real time, every time I send out trades, or make trades, I do send out alerts of that trade, how many, you know, options I bought, what price I bought them for, what expiration, all of that. And I give you usually a little bit of thesis on why I'm making that trade. RTX, I'll give you guys that one here in this video. The thesis is simple. RTX is a defense stock. It's down 23% in the past 3 months or so. It did catch a rally once this Israel invasion started, but it hasn't escalated from here. If you do see any escalation within the next week or two, that's going to be an overall bullish thing for any defense stocks. RTX falls in that category. And you're trading at very low levels, relatively speaking, for RTX. RTX is under a 20 PE. If they have good earnings, that could just be the first step. If you get an escalation in the Israel conflict, that's where you could get some exponential gains. Obviously, anything can happen on the earnings. That's the thesis here. We'll see some of those defense contracts, especially for next year, if they do provide that guidance, should look pretty dang healthy. So there is that, but you do have Microsoft and Google tomorrow in after hours. That's probably going to set the tone for the broader indexes and for earnings season mostly. I mean, those are the big two names. You have Amazon on Thursday, you have Meta on Wednesday, but they're probably not going to save the markets if Microsoft or Google is bad. I also did make a trade on Microsoft as well, so if you guys want to see that as well, link down below in the description of this video. That's going to do it for this one, guys. I think we covered quite a bit here in this video. Let me know if you have any questions, comments, concerns, any of that down below in the comment section. Hit the like button as well as subscribe to the channel on your way out. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.